Good morning, good afternoon, good evening, and welcome to Martyn Lucas Investor. It's now time for another one of your requests. We're doing 72 hours of back-to-back live reviews. Excuse me, got something caught in my tooth there. It's live after all. Okay, and you asked me to do, thank you very much indeed, another new member. You asked me to do...
has become a member.
Thank you so much. You've asked me to do reviews, reactions to certain news items over the next 72 hours. It's your show. I'm doing back-to-back. If you are a member of our channel, here is a link to becoming a member, or you can look below or on the homepage of the channel. Become a member and make your request. Another new member. It's a very busy day today.
Roman Matsumoto has become a member.
Thank you so much. I definitely got something caught in my tooth. I was prepared before the show, but suddenly it's all gone wrong. Never mind. It's a live show. I'm going to do about 30 streams a day for the next 2 or 3 days. Another new member. What is going on?
Educated Consumer has become a member.
Thank you so much indeed. It's been a fantastic day today. What's going on? Anyway, we've got a big one coming up next. After this, we are going to do dividend cons. Lots of dividend cons at the moment. People thinking they found the answer to becoming rich very quickly. People professing to be dividend experts and dividend kings. In reality, it's all a load of nonsense, and I'm going to debunk all of it later on. That's my next broadcast, and after that, we're going into the Robinhood earnings. But without further ado, let's get straight into Honest Company. Ticker symbol HNST. You asked me to do this, and we're doing it right now. So if you are a member, the higher your super chat, the higher it goes up the list. The top super chat right now is $10. So if you bid more than $10, you will get your review instantly. I'm doing back-to-back live reviews like this. Consider subscribing to our channel. We're on the way to 100,000 subscribers. 0.8 in the world are above 100,000 subscribers. So we are very proud to be in that club. We'll be there by the summer. Right, Honest Company. What is it? Let's get straight into it and talk about it, okay? This is our review. Honest Company. It provides non-toxic natural products online. Offers diapers, wipes, bath, skincare, and all kinds of different things. In this review, we're going to look at the charts. We're going to look at the website itself. I'm going to give you a back test against the S&P 500. We're going to look at the latest ratings. We've got some, I've prepared my analysis for you here. Strong spoiler there, look, strong buy from Quant. Latest news around tariffs. Everyone's concerned about tariffs. So I've got all that information in this review for you coming up. Straight after this, we're going to go into dividend cons. Shall we carry on? So Carla B. Vernon. If you'd like Carla on the show, simply email Investor Relations and tell her about our Meet the CEO series, and say you are an investor and you'd like her on the show. Build a relationship with them, and that's how we get them on the show. They'll contact me. Los Angeles, California, 2011. Been around for a reasonable amount then, and 176 employees. Very, very, very low volume. That means you can get stuck in the stock and not be able to sell it for the price that you want. It's not moving very much, which means that you might want a certain price and it's just not available. You have to sell it for lower, or you have to wait for a higher price to sell, or to buy it for lower, sorry. The average volume is 2 million. Today's volume is 1. So very, very low. 616 million. Very, very small company, this one. Negative 141 times earnings. We got Morningstar saying it's a strong buy, but we'll decide that. We don't take any of that information. Hedge funds have been buying it recently. You can see that nothing in Q4, Q1, 2, 3, 4, but this year people are starting to, or at least last year, people were starting to look at it. 23, nothing, but now people are looking at it. That's encouraging. Insiders. Well, insiders aren't doing much. That's pretty, back in September last year, they were selling it. But since then, it is just normal tax selling, automated selling. Nothing too exciting there. What about the earnings? Well, the company doesn't make any profit, net profit that is. So the investor doesn't get any money at the moment. It's negative, hence the negative earnings to price ratio. You can see it has been outperforming the analysis report, though. That's Wall Street has been outperforming that, apart from that one little dip where it met expectations. And the next earnings is March the 6th. If any one of my members does a super chat for this, we can cover the earnings, and we'll do that. But anyway, there you go. Who else is buying the stock in Robinhood? SoFi, Fubo. What does this tell me? This tells me, I'm just looking at it now, volatility. Nike, that's good. Palantir, a lot of gamblers. Shopify, Estee Lauder, AMD. What that shows me is a lot of retail investors who like to speculate and gamble, which would make sense. If we go up to the chart, we can see, there we go. It is a trading chart there, up and down like a yo-yo. If we go over the maximum period, you can see IPO dropped right off and not doing too much at the moment. All right, okay. Let's go into the numbers, the analysis, and let's determine whether this is a good stock, a good business to buy or not. All right, so let's start with our basic analysis, our ratings. Now, Seeking Alpha analysts are saying strong sell. We scratch that. They're paid to say that, so I'm not interested in that. Wall Street, buy. A strong buy, well, a buy from Wall Street. Okay, they're traders, not investors. And Quant, the AI software, which has outperformed the S&P, very good guy to look at. Strong buy. So we've got a mixed bag here from strong buy to strong sell. This is unemotional. This is people promoting their own stories. And that just show you everything you need to know right there. If you wanted to know about analysis, just go on those that don't have anything to sell, like me, not selling anything, not sponsored to say anything, and you can see two very, very different reports from strong sell to strong buy. Very interesting, so you always remember that. Valuation, C-. It's virtually as worse as you can get. It's expensive. It doesn't make you any money. Growth, B. It's moved up from C+. Profitability, C, from C-. It's moving up. A+. Momentum and revisions. Now, momentum is for the benefit of traders. The stock is moving in a certain direction. Its momentum is going up. But at the end of the day, as an investor, you're looking to buy a business, not just to catch a trend. Okay. So anyway, there's that. What about short interest? There's a bit of short interest here, 4.32. But not a great deal, but a bit of negative pressure. But let's go and see. I've put together for you some analysis here. See what you think of this. Quant is saying a strong buy. Let me give you this detail here. All right. So I'm going to go over the company description again and give you the pros and the cons, the pluses and the minuses, and then I'm going to show you the balance sheet and everything else you might need to know. The Honest Company, founded in 2012 by Jessica Alba and others, is a personal care company headquartered in Los Angeles, California. It focuses on clean, sustainable, designed products, catering to a market that values health, transparency, and sustainability. The company's offerings include diapers and wipes, skin and personal care items, household items, wellness goods such as baby clothing, nursery bedding. These products are sold through a robust omni-channel strategy, incorporating both digital and retail sales channels. Approximately 49% of their revenue in 2023 came from their digital platform, Honest.com. Honest.com looks like this. This is their website. Very simple. It looks a bit like eBay, perhaps. A bit like eBay, perhaps. This is the way they put things out. Apple-esque, I guess you'd say. A bit Apple-esque, the white and the black. It's very straightforward. This is their logo, the butterfly thing here, to sort of emphasize sustainability and all the rest of it. This gives you an idea of how the company look and how the product is presented. Anyway, let's carry on with our review here. We've got as far as there. The company has built a strong presence in the US and Canada, with products available in more than 51,000 retail locations. Despite its growth, Honest faces significant competition in the market, requiring continuous innovation and cost management to navigate its path to profitability. I like to buy businesses that are profitable, succeeding. I don't like gambling on what might be, especially in a crowded space. Think of this. This is a crowded space. Competitors and unique value. Now, this is important. If you're buying a business, you want to know what its competitors are and what's its ISP, what's its unique value, what makes it unique. The Honest company operates in a highly competitive market. I just said that, with several prominent competitors. It's in the diapers and wipes segment. Its main competitors include Kimberly-Clark, makers of Huggies, Procter & Gamble, makers of Pampers. You can understand it's like trying to compete with Coca-Cola, right? In the skin and personal care category, it competes with companies such as Clorox Company, parent company of Burt Bees, and Unilever, maker of She Moisture and 7th generation products. So already you should be very concerned about the competition. Doesn't mean you can't win, but you've got to carve out a niche. It's not that easy to do. It takes a lot of effort and time. I know I started, all my businesses were very niche-y, including my YouTube business. The Honest company distinguishes itself through its commitment to clean and sustainable products, utilizing plant-based and naturally derived ingredients. This focus on transparency and health aligns with growing consumer demands for environmentally friendly and safe products. The company's strong brand reputation and omni-channel presence further enhance its market position, allowing it to reach a wide customer base while maintaining direct customer relationships through its digital channels. Now, if we look at the ratings now, this is important. If we look at, first of all, we've done the ratings, but let me explain them to you in more detail. Valuation. HNST presents a challenging valuation landscape. Its price-to-sales ratio of 2 is significantly higher than the sector median. So, in other words, in this sector, this particular stock is more expensive than its competitors. So that's another disadvantage there, reflecting a very expensive stock. These stretched valuations suggest the stock might be overpriced compared to its peers. People like it, it's trendy and it's new and it's cool, and then it gets overbought. It no longer presents a viable investment proposition. The growth metrics are extraordinarily robust, with year-over-year revenue growth of 10%, significantly above the sector of 2%. So that's good. It's expensive, but it's growing, and that would explain why it's expensive, because it's growing. Now, it can grow into its price. This phenomenal growth trajectory highlights HNST's successful expansion and increasing financial performance. So it's looking good, but expensive. Look for a dip if you like this sector. Profitability. HNST struggles with profitability, as indicated by a negative EBITDA margin of 0.33% compared to the sector median of 13%. So it might have margins, but its net profit at the end of the day is negative. It's not making any money for the business, for you, the shareholder. This indicates difficulties in converting sales into profits. Exactly. You can sell the stuff, but can you make money? And that's very difficult to compete with all the competition I've just given you. You can sell stuff, but can you turn a profit? And if you can't turn a profit, ultimately you will go bankrupt. You just go out of business. Revisions. Recent trends in earnings estimates are promising, with five upward revisions in the past 3 months compared to only 1 downward, suggesting analysts are optimistic about HNST's future and earning potential. Okay. Positives raised by analysts. We don't want to worry about that. Concerns, we don't want to worry about that, and that will do. That will do for the moment. Okay, let's move on. Now, I just put this into the story because the company faced tariff-related risks. Their products have tariff risks, so it's worth mentioning this. Like, for example, we learned Coca-Cola today are moving towards plastic bottles for a while, away from their aluminium bottles because of aluminium tariffs, to protect their profits. And I'm sure they'll return once again to aluminium once the tariff war goes away. So that's worth thinking about as well. Just bear that in mind, okay? But this company has a tariff risk. With its fastest growing products made in China, the Honest company faces tariff-related risks that would drive up the price of its baby wipes should the company shift its sourcing domestically. Given its smaller scale compared to competitors like Kimberly-Clark, it would be difficult for Honest production and pricing to be prioritized by reputable manufacturers. You may remember the incident years ago, the famous incident when Sir Richard Branson and Virgin tried to promote Virgin Cola and got crushed by a group of guys with tons of cash in suitcases, getting on an aeroplane and flying to different places around the world, basically bribing people to keep Coke on the shelves and Virgin off the shelves. Similar thing here. You've got a competition here where it's going to be difficult to compete. The risk associated with tariffs on Chinese imports, coupled with a 125% run-up in the stock year to date, prompts Loop Capital to downgrade the Honest company to hold from buy, setting a $7 price target that assumes a 6% downside from Monday's close. Okay, so I think you can understand where I'm going with this. Okay, now let's look. If you bought it, let's compare it to the S&P 500. If you put in 2022, as far back as we can go, $10,000 in Honest, you've now got 7.9. I'll zoom into the numbers there. 7.9. Where in the S&P, you've gone from 10 to 13. You can see the performance there on the blue line. S&P green is the Honest company. Now, you can't really use this as much of a guide because, unfortunately, it's not got much history there. So, but it's worth mentioning and noting so we are familiar with it. You can see there from the chart how it is a trading stock. Buy and sell, buy and sell. No one's really holding this. There's no dividend here. It's a tradable stock at the moment, at least. Anyway. Okay, let's. If you like this stream, please do tap the like button. I'd very much appreciate it, and consider subscribing. I will give a quick shout out to everybody who's in my show. Welcome, Mike, Lenny, David, Gary, Leston. Welcome to all you, Joseph Kinch. Lovely to have you all here. You mentioned hood earnings. How do you feel about the hood earnings? I am covering the hood earnings. I can't go into comments right now as I'm making this live video. Right, let's go into the Honest company's numbers in finer detail. So I just talked about the valuation, expensive. Well, there you go. This is my intrinsic valuation, overvalued by 16%. Makes perfect sense. Now, if you like my software, Alpha Spread and Seeking Alpha, I've just dropped it in the chat for you. Go and check out the software. With my referrals, you get free trials and discounts. Without a referral, anybody's referral, you do not get free trials. But with mine, you get a better discount than anyone. I always insist if I ever refer with anyone, I get the best deal that is possible and better than most. And I always negotiate that for my members. I always make sure that I have the best deal. So check out the links below and in the chat if you're watching as I make this video. Overvaluation by 16%. Now, it's a growth stock. It's new. It's growth. I can pay over 25%. However, I don't think with the competition and nothing unique here, really, other than we're doing it cleaner, more environmentally friendly. There's nothing unique like an iPhone over an Android. I don't think it really has a best case scenario, 6%. I would say the base case is about right. And I can spend up to 25% over, but for a high growth stock, I don't see this as a high growth stock. Maybe you feel differently, I don't know. Anyway, scroll down, let's have a look at our financials. Now, let's go straight into the revenue. That's up 4%, but we're not expecting any growth spurt here. We're not expecting, there's no S-curve here. No explosionary moment. So we don't want to overpay for the stock. There's nothing to take us up. Operating income up 65%. When we used to lose money, things are still losing money, but they are improving. That's why people are overpaying for this stock right there. Net income, same story, up 66%. We are improving now. I don't see an S-curve, but it might grow into its price. It's not that much overpriced, if you like. So it's a potential buy, really. Free cash flow up 54%, operating cash flow up 50%, and EPS 69%. Now, if you want to know what all these things mean, if you're interested in all this and what all these things mean, you can hover over the different metrics. If you have the software, I've given you the link, and you can find out what they all mean if you are not familiar. All right, so 209 million are the assets, of which 53 is cash. I like that percentage. I don't like a business which just holds a pile of cash. It's just basically cash in the bank, a bit like DJT, Donald Trump stock. It was just a holding company for a potential business going forward, not actually doing anything, just holding cash. Well, I can hold cash myself in the bank. I don't need to pay a premium to hold cash in the bank. I can do that myself. So that's no big shakes, right? Anyway, let's look at the liabilities. No long-term or short-term debt. Just working expenses. That's pretty good. That's going to give us a good balance sheet. Scroll on down. This is where things start going wrong. We talked about earlier, the gross margin was quite good. However, it's not making any money. Gross margin is before operating expenses, profits, and so on and so forth, taking out expenses, all the rest of it. Operating margin negative, net margin negative, makes some money. But things are improving. So you can say that things are moving in the right direction. That's maybe a time to buy the stock. It's a potential buy from me so far. FCF margin, 7.6%. Interesting. ROCE, unmeasurable. These are all unmeasurable. It's not their zero, they're unmeasurable. So don't get too excited about that. Profitability, 31. Like we say, it's making money, but it's not making a profit. It's taking in sales, but not making a profit. We want to be over 60%. That's what we want. Nice bright green. Solvency, like I said, the business is not going to go bankrupt. You're not going to lose the business in the short to medium term. Now then, let's have a look at it here. Worst case scenario, that's if rates stay higher for long. In fact, rates won't bother this business. What bothers this business is tariffs remaining a problem. So we could see a downside here, but it isn't that far down. 8% worst case scenario. If you were investing $1,000, perhaps you put 800 in, keep 200 back. For a dip, you can then absorb that and know the average. Again, I talk about it on the show. Averages aren't everything. Price and value is. Averages aren't really the way to go. People worry about learning their average all the time. It's not really the way forward. But anyway, what about the average price? Now, average forecast, 22%. Very good. I would say we are in here once we get through tariffs. And tariffs, I'm sure, will be through in the next 6 months. So this could be nice. You could see an upside here in the next 6 months. Best case scenario, 64%. Well, that's very good. Very, very good indeed. So I'm quite happy with that. I think that is pretty good. What else are we talking about? Who is covering it on the news? Yahoo Finance, the only ones 5 months ago. No one's giving it any attention here. It's not getting much press coverage, which means it's no one's talking about it. I can guarantee you we will rank number one for this stock very, very quickly. And if anyone wants me to do an earnings, I will cover the earnings and we'll rank for it. And this is the sort of stock that our show can actually move quite easily. So there we go. There is the honest company. Not too bad at all. It's not going bust. It's got a good balance sheet. I can see this doing well. It has a lot of competition. It's a very difficult sector, but I can actually see them doing okay and getting through this. Tariffs are their main bite at the moment, but that will improve given time. Okay, so now then, this was made in a live stream. We've got another event coming up in a moment. Our next event is this here. This comes up next. Let me give you the link for this. This is called Cons in Dividend. Dividend cons. People that think they discovered how to make money without doing anything simply by buying dividend-paying stocks, high dividend stocks. And I've recently been looking at it thinking, what's all this about? And I've done some study, and actually it's just designed to draw people in. And actually, it's a load of nonsense. So this is the event coming up in a few minutes' time. There it is. Cons, dividend cons. I decided to put it the other way around so it would fit. It's pinned to the top of the chat where you are right now. It's also below in the description of this video, and I posted it 3 times in the chat. And if you stay with me just a couple more minutes, this will take you automatically through to this event. And then from that event, we're going to go into our final event of the day, which will be Robin Hood earnings. Okay, so let me just make sure I've got this set for you. Yes, I have. Save. There we go. As this stream comes to an end, it'll take you into our next event, which is Cons, dividend cons. The nonsense of people buying high dividend stocks, thinking they are beating the system and they know better than everyone else. And it's absolutely untrue. It's been a subject of our show recently, so I've done a lot of research in it and found out it's all a load of nonsense. Not surprisingly, really, is it? Is anything free in this world? No such thing. Anyway, click above my head for all the links down below in the description. I've given you Alpha Spread, Seeking Alpha. Below in the chat is also the next live broadcast, which is in just a couple of minutes' time. Dividend cons, join me for that. And then we get prepared for the earnings for Robinhood, and there'll be live Q&A. I'll be answering everyone's questions in that once again. So that's coming up after that one. All right, above my head for all the links down below in the description. Become a member of our channel, and you can get these reviews and all the videos that you want. This is your channel. I'm making the videos that you are asking for, that you want me to do, all live like this. So there you go. All right, so above my head, down below, over here, I shall put the Honest Company playlist. They'll have their own playlist, and down here, I shall put what's next. You're not seeing it now because I'm making this live, but later on, it'll have what's next, and what's next will be the cons on dividend stocks, the dividend con stocks. All right, okie dokie. That's it from me. Join me now on the next one. It's your show. I'm doing the things that you have asked for. It's a member's perk, minimum $5. I can make your live video straight away, whatever it is that you want me to discuss. Of course, in the financial sector, not gardening tips or anything like that. Until next time, as always, take care of yourselves and each other.